purchase price is the back taxes. If the mortgage has been wiped out and the liens have been wiped out, which usually they are, the only thing that you're paying are the taxes. If you paid $2,000 for taxes, at the end of that year, they're going to send you a check for $2,000 plus the interest. Well, a lot of times, not a lot of times, but those rare times when the property does come back, you'll get a deed in the mail instead of money maybe, because you pay the taxes and you get the property for the taxes.
But now your taxes are on your property taxes. Once you acquire the property through the lien,
right?
What happens on that assessment? Does it go at the price that you paid for the lien?
No. That's going to go at the general value of homes in the area. And that's what everybody's complaining about right now. They're saying, hey, you know, all these cities across America have the interest rates for the have their tax rates up to the peak, but yet all these places have been devastated by values that are like 50%, and you haven't lowered the taxes. And the cities are coming back and saying, well, that's because we do our assessment every 3 years and we haven't quite gotten there yet. And other cities are coming back saying, well, you know what, it's kind of to the value of the property, but not really. If we don't want to change it too bad, we're not going to. Well, there's another example of what kind of things you have to put up with to own property when you can get that thing back on a tax lien once in a great while, and then go back out to a realtor and say, I don't care if you sell it for 20% less than the value, get rid of that thing, I just want my money to go back and invest in the tax liens as fast as I can. And that actually, from listening to some of these things that they've been saying, kind of woke me up, because I put $5,000 in for my daughter in an IRA, I put $5,000 in for my son, I put about $6,000 in for me and $6,000 for my wife about a year or two back, and I've been going, well, you know, I can combine that, I can buy something, what should I do? I'll get to it, you know. And all of a sudden, from listening to this stuff, it's becoming real apparent. You don't leave that money just sitting there doing nothing. You get back out as fast as you can, because the only way that you can get a high interest is to keep it working for you. You want that money out there working for you harder than you have to work, and faster than you work. So the sooner you get it back out there and do something with it, the sooner you're going to build up your returns and have this stuff going. So it kind of made me go, yeah, I got to get off my butt on this one. Okay. So that probably, we're getting close to the end of the tax lien stuff. I've got a little bit of information on my website for, you know, showing houses. People want to list the house. There's a place to do it for free on NHBIG. REOs, I've got some paperwork back there for people that want to partner up on properties, but I put in there we can partner up on these tax liens just as easy. Okay, now when you partner up on a property, it's guaranteed with a first trust deed, and you come up with what kind of split do you want. And if you look at the paperwork that I've got back there, it can be 50-50, it can be 25-75, it all depends on what you feel comfortable doing and how you want to approach it. I'm not real sure on how we're going to do the splits on these partnering up with tax liens and how you're going to secure that, but we're going to find out, I guarantee you. And when we find out, there's going to be some people that go, yeah, that's good enough for me, especially if we start low financially, and you know, if I feel good about it, then we'll go more. Like I said, I've got one investor already that said $75,000. I want to do it now. I said, well, you're going away for a week. Let's do it when you get back. Okay. So I'm finding it much easier to partner up with people doing tax liens, because you can start off in such a smaller amount. Let people see what's happening, let people feel good about the relationship that you're building. So really, kind of what I'm saying to you all is, sure, you can go out there and you can do the tax liens and make some money, but we're all going to run out of money. And in fact, that's how they started. How Sean and how Tony started was going out and partnering up with people so they could build up enough cash that they can continue doing their own thing. 50% of something is a lot better than 50% of nothing for both people. Okay? Yeah? I'm getting real close. We're on a...
That gentleman over there, what states have you been investing in for tax liens?
New York, Alabama, and Tennessee.
That's Carl Cameron. Now, Carl, when you do your tax liens, are you doing it online, or are you physically going to an auction? Or both?
Both. It varies from county to county. Each county is different on how they do it.
Okay. there's somebody that's actually bought tax liens in the room, hasn't gone through this program. Where did you get most of your information about doing the tax liens and deeds?
Trial and error.
Trial and error, okay. So that's why I'm saying, you know, we've all paid a lot of money for tapes, books, CDs, and education. And we've all been happy, we've all been burned. We've been through all that stuff. And $995 is not that much for what I feel that they're offering. I think Sheila's very happy, I think Larry's very happy, you know, to have that information. Because you're going to end up spending a lot of money one way or the other trying to figure it out on your own.
School's expensive no matter how you go.
It's expensive. Exactly. You're going to pay one way or another.
So one thing that doesn't really happen is leverage, right? It's no leverage unless you're using other people's money.
Leverage. Well, now here's the thing about leverage, and this is what always gets me. Everybody says, hey, you know, real estate is all about leverage, and you put your money down, you get leverage. Well, you know, the market goes like this, up and down, sometimes it's way down. Generally speaking, it's like this over a 30 or 40 year period, right? Well, when is leverage good? It's only good in a rising market. As soon as you get to the top, there's no leverage. When it starts going down, there's no leverage. You're going into foreclosure. When you're at the bottom, there's no leverage. There's no leverage until it starts going back up again. So anytime you want to invest, if you want leverage, it's only on the upgoing cycle that you're getting any leverage anyway. Except for borrowing money from people at a cheap rate compared to spending a lot more somewhere else. So, you know, if you're going to do leverage and you want property, I'm kind of getting to the point where I'm going, I've done this for 30 years. If I want to really play the leverage game, I'll wait until the market starts coming back in Vegas or Florida or California. And when I see it's really starting to hit, I might try and get in and get out. But after that, I'm out. I'm taking the money back. I mean, you can go to the Midwest and you can have a rental property that doesn't go up, doesn't go down. It's pretty safe. It cash flows. But you've got all the things that we talked about to deal with. And that's why I'm kind of feeling like, hey, you know, I've done that for 30 years. I think it's time for a change. I'm not going to drop it completely because we'll still get properties that we want to just give back to a realtor or somebody and say, hey, get rid of it as soon as you can. I want to go back and do some more tax liens. And it's going to take time. People say, well, you know, tax liens, that's not a passive investment. You've got to work your butt off. Anytime you get over about 5 properties, you're going to be working your butt off for your investment properties anyway. Right? Calling up the managers, try to find out why it's not rented, why the contractors charge you 5 times more than they said they would. Yeah, there's passive. I mean, it depends on how you look at it. Okay. So there's some of the options I've got on that, you know, coaching. Some people may say, hey, you know, in fact, the investor that says I've got $75,000 and I want to do this like now, said, I'm going to do this now for about a year. I'm going to learn a little bit, but I want to pay you through coaching, so after about a year, I can do this on my own, and I won't need you. That's fine. I'm up for that too. So, you know, if somebody just says, I don't want to partner up, I just want to learn how, that's another option on whatever. Auction site, you went through that auction site, tried to get a property, they strung you out for what, 2 months, 3 months?
Yeah.
3 months, and they came back and said, oh no, they decided not to sell the property after all. Kimberly had a good deal on it, because I had mentioned it in a previous meeting. And so she tried it, they hung her up for 3 months and came back and said, no, they decided not to sell it after all. I think...
To be fair, it wasn't Liens auction the one we had. It was that the property owner, the REO company that owned it, that put it on was... What they don't tell you when you go through the auction sites is that it's the discretion of the seller to sell or not. So you might win the bid. They might sit on your $1,000 deposit, $2,000 cash for a month or two, while the seller decides in their own time, yes, I will or won't sell, even if it met the terms that were listed. And in this case, that particular owner or the lending company that got it back to REO just said, well, no, after all, we aren't going to sell it at your winning bid price.
They may have taken her paperwork and went out and marketed it and said, hey, look what we can get. You give me something better?
That's exactly what they did.
Yeah.
Plus, they set my $1,000.
Yeah, and they'll give you your money back. It's not like they're going to rip you off. They just wait.
Interest-free loan.
Right. And they were probably a smaller investment, whatever. Now, the reason that it worked for me, and I did one for my sister here recently, is because I think Like this property here in Fort Wayne I did, that was a $2,000 property I got.